Hi everyone, welcome back to Be Rich. Today I thought I'll talk about Trent. Trent results are due tomorrow, so I thought it would be a great opportunity to talk about Trent. I don't put too much water into these quarterly reports because it's very short term and really doesn't offer you much other than what has happened in the past few months. I said about this in Tata Chemicals video too. I hope you found that video interesting. I thought today we'll dive into Trent, talk about Reliance Retail, what is the landscape in this, what's the competition between these two, and finally talk about Shein, which Reliance has brought back into India, and what does this mean to Trent, and should you be thinking there's an opportunity if Trent corrects, or is this something the harbinger of tougher times for Trent, and we should be a little more cautious, as I say. Well, I hope that you get some answers at the end of this video. First, let's talk about what does Trent do. What is Trent? Trent is a lifestyle company, fashion, lifestyle, and grocery retailer under the Tata Group, right? It has multiple brands under them. They're in multiple cities. They're throughout India. They have lots of shops. You have seen them. Westside, Zudio, Samon, and Utsa, and Mishbu. Mishbu is a millennial focus fashion accessory brand, while Utsa is a modern Indian fashion lifestyle, right? Samo is a luxury on occasion wear brand. Zudio, which everyone should know, value fashion brand with affordable pricing, and the flagship, of course, is Westside. Westside was started a long time back. So these are the major fashion lifestyle brands which are under Trent. And then you have food and groceries, which is Star Supermarket, which is offering curated groceries and fresh produce. Basically, it's a supermarket chain, and they were there in Chennai, but they closed the Chennai operations and other places. I've seen them in Bangalore, and it is a different shopping experience if you've popped into it and you've seen it. It has a lot of discounted value proposition in terms of groceries and staples, much like Big Bazaar, I would say. And usually when you find Star Bazaar, you would also find a Westside or a Zudio all together. So it's like an ecosystem, which the way Trent open store. So within the same building or in the same vicinity, you will find the Westside, you'll find a Zudio, and you'll find a Star Bazaar all potted together. So that's the way I saw it in Bangalore. And other joint venture strategic alliances they have is they've tied up with Zara. Zara India is with them, joint venture. Zara is a famous brand globally, and you know the powerhouse Zara is. They've tied up with them. Massimo Dutti India is a luxury brand, and they are entered India through a joint venture with them. And of course, Tesco hypermarket business, which is Star Bazaar, as far as we are concerned, is would tie up with Tesco. Tesco helps Trent with the logistics and joint venture with them. So this is the lay of the land as far as all the businesses Trent is doing. Now, market presence is what we need to look at, right? They have 850 plus stores in India, across India, which is fashion, lifestyle, and grocery. And they are expanding aggressively in Tier 2 and Tier 3 cities. I myself have seen this, how aggressively Trent is pushing and opening stores. Before, I used to find one Zudio. Now I can find a Zudio in almost every area, mostly in Chennai. I can see. If you just Google it, you'll see it. There's even a famous joke which I saw on social media, that if you search Zudio in Delhi, there's a certain area of Delhi where so-called high net worth individuals and the fashionistas live. You'll find no Zudio there because the people there are too wealthy and snooty to buy Zudio brand. This is a funny joke. But if you see the flip of it, the rest of Delhi is quite well populated with Zudio stores. So since they have expanded on metro, these major urban metro Tier 1 cities quite aggressively, now they're going to Tier 2 and Tier 3. Those of you who live in Tier 2, Tier 3 cities, why don't you comment down below saying wherever you spotted a Zudio, are you noticing more Zudios and Westside and Star Bazaars coming up around you? I'm curious to know this. They're integrating offline strategy. That means strong e-commerce presence. They're online and they're offline. Most of their stores are offline, of course, but they do have an online presence. But I would say the Westside store experience has been good. The Zudio store experience is good, but they need to integrate this, which is what the Chandrasekhar is trying to bring, a mega app. So, you get your big basket, you're going to get your new coins. I don't know how this will happen, but as far as I have experienced and I've used the Westside app, it's pretty good. It's very reliable and its delivery is good, payment gateway, everything is good. So I would say it's a great app. So the integration of online and offline strategy for them is working as far as their stores are concerned. And they do have a very, very strong brand in the Indian market. Consumers know the Trent brand. They know West Side, they know the quality West Side is, and they know the Tata brand and quality Tata offers. And this allows them to increase their margins. And they do have a good margin in these retails which they're doing, which is one of the main reasons you've seen Trent share price being a runaway hit. Because of all the stores and the expansions and the earnings, future earnings which are projected, people have, analysts and the FIIs and the DIIs have been counting that, and they've been pushing the PE of Trent to stratosphere. That is why it has been so-called diamond needle forever and ever. I have not seen it coming in anywhere close to somewhere I wouldn't even look at it, because it's so expensive. But that's where this interesting part of the story comes, where we'll get into it, where after we talk about Reliance Retail. So what is this market analysis and competitive landscape for these guys? Well, if you look at the market analysis for Trent, right, they're an Indian retail fashion brand and it's worth over $100 billion with a CAGR at 10%. Okay, with the claim is with the increase in disposable income and urbanization and demand for branded apparel. So this analysis by analysts, I would say, brings into question where India is in terms of its economy, where we are still recovering. I would say this analysis would be very true if we were talking about India maybe 2-3 years back. Since COVID, we have been struggling to get back on our feet. Some of it has been good, some of it has not been so good. So I would not count on this disposable income, being there. But people do spend a lot of money on apparel in India. We, especially in the millennials and the Gen Zs, we like to spend that, even if it's not disposable, even if it's critical income, we rather borrow and buy. That I've seen in my own cohorts around me. So I do have to give some water and credit to this analysis. And the major competition Trent is facing is Reliance Trends, Shoppers Stop, Myntra, and other international brands which are available in India. But I would say they are really huge in India. So what are the growth drivers and what are the analysts are hoping and why they're pushing is because they believe Westside being an in-house brand, Zudio being an in-house brand, and fast fashion being really big in India now. Fast fashion is clothes which are bought, used a few times, and consumer throws that away and buys another set of clothes because change in style and change in fashion. So the idea is that you consume more and more clothes, like how you consume any other things like staples, or you consume paper, stationery. Clothes is being classified in that. In fast fashion, it is a global problem because this overconsumption is leading to a lot of waste, and that is something that needs to be addressed and thought of by these companies which are creating these large volumes of clothes at a low cost, and consumers like us who are consuming. That's for another day, another video. I don't want to get into a lecture thing. And of course, the expansion has been one of the main growth drivers. This is what's been pushing their price and the price to earnings where you're seeing it at as far as Trent is concerned. The smaller portion of their business is, of course, the grocery retails. That is around an $800 billion. Okay, 90% is unorganized in India. So that's where Trent is sitting. These hypermarkets, supermarkets are growing in India. They're becoming more and more popular. You're seeing it in more and more cities where you find these huge mega supermarkets. And right now, it is growing at 15 CAGR because of the convenience consumers are finding going to one place and buying everything which you need. Reliance Smart is a competition for them. DMart, Amazon Fresh, and Flipkart groceries are online, while DMart and Smart Reliance are offline competition to them. And they're also, because of their own brands, which if you've gone into Star Bazaar, you would have seen this, their own Tata branded staples are there being sold, and that is contributing to a higher revenue and higher margin for them. And because 67% of the products sold in Star Bazaar are owned by Tata, those brands. So that also helps them improve their margins. So if you look at it in that term, I would say majority of their revenue, I would say 80% of their revenue is coming from fashion, while the remaining 20% is coming from groceries and other things. This is where Trent is standing right now, right? There's a lot of potentiality for Trent as India is growing, as urbanization is happening, and as it's expanding. On the flip side, where Trent has become this huge monster, behemoth pushing through, you have the Reliance retail business, which is something similar to them, but at the same time, they're different. Because the key thing in Reliance is you have under Reliance, you have their digital, and you have Geo stores which are operated. Then they have the fashion brands. They have AGO and AGO Lux, Trends, Youngster, which is the affordable brand, and Swadesh, which is the Indian brand. Then Reliance Jewels, the jewelry retail comes under this, and groceries, which is Reliance Fresh, Smart Bazaar, and Geo Mart and Milk Basket. These are all their online retails which are there, and they have Geo Infocom distribution, which also is plugged into this. So if you see, in the case of Trent, their jewelry is in Titan, right? They do have cheap accessory, which I told you about, but so-called jewelry is outside. It's another thing. Tata's whole digital landscape is in Chroma, which is not under Trent. So if you look at it that way, Trent is purely focused on fashion and groceries, which is a smaller portion, which is there inside Trent. While Reliance Retail has fashion, it has electronics, and it has groceries, and the whole Geo Mart landscape is plugged into this, right? So if you look at it like that, it's really not oranges to oranges, as they say. There are two different companies if you look at it. The main reason why Reliance Retail has come into the news is they have gone ahead and tied up with Shein. Who are Shein? Shein is a Chinese brand, an online cheap fast fashion brand, and they're famous world over. They were in India, then they got banned in India. Reliance has tied up and brought them back into India. Before we get into what Reliance is doing with them, we'll first talk about Shein. Shein, what they do is they're huge in the US. They manufacture in China, where costs are cheap, raw materials are cheap, and they create fast fashion clothes at a very, very low cost, and they ship them all over US and the world, and they become a big brand because they're cheap, they're easy to buy, and a lot of people use them for a while and throw them, like I said before. So they become a huge company in this, and most of their business, I'd say all their business is online. They were in India, like I said before, but then the Indian government threw them out. Now, what has Reliance done is they've got a huge global brand, and Shein has got a huge global brand, which is the Shein brand, and a huge loyal customer base, which Indians don't have access to. So Reliance said, okay, went up to Shein and tied up with them, saying, okay, you cannot bring your Chinese product into India and sell. We have our own facilities to manufacture these products. We'll manufacture and we'll ship it. You tie up as a technology partner and your brand. So they tied up in such that Shein will provide technology support for Reliance, while Reliance does all the manufacturing in India for all the clothes. So if you go to the Shein app, the India app, and you click on a product and you go down and you take some time and read about where it's manufactured, where it's made, it's all in India, right? So it's not actually a Chinese product which is being sourced and brought into India. These are actually Indian products being made by Reliance in India with raw materials in India. And what they're doing is they're using the Shein brand and the image of Shein to try and sell more in India. So that is the relaunch, right? And initially when this happened, this had a huge impact on Trent's share price. Why did it have an impact on Trent's share price? Because like I said, 70 to 80% of Trent's revenue comes from fashion. And now that Reliance is trying to bite into it, it's going to create a problem, is what they feel, because Trent is very strong with fashion. This was an initial knee-jerk reaction by the market. It was beaten down yesterday. Today they pulled it back, saying, okay, we are over reacted to this, and the market, Mr. Market, is now pulling it back up. So this happens. So what should you do? Well, first of all, Trent, either way you look at it, even after this beating or whatever, still a very expensive company. And I would say, if it comes into the realm of reaching back into the planet from the stratosphere, it's right now like orbiting like a satellite. If it comes back into realms where we can touch it, then there's some discussion to be had. At this current moment and this track where we are, I don't see it being anywhere near, coffee tiffin range of any sort. So that being said, what are the factors and the risks for Trent? Well, growth potential, the Zudio is aggressively expanding, is a great brand. They have high margins because all those brands which Trent is making most of its money is all in-house brand, compared to Reliance has a lower margins, right? And it's going to take a lot of investment in Reliance side and brand building to come up and catch up to Trent. So there's a huge gap there. But Reliance has 1,500 plus stores, new stores opening per year. Trent is doing only like 150 stores. So which would be better? I don't know. Sometimes rapid expansion in history has proven to be a negative thing to do because you spread too fast, too thin. So I don't know. We'll have to wait and watch to see how this landscape plays out. So what is the final verdict? What should be my final thing to look at? Well, my final verdict would be this. For Trent, I would say it's a stronger bet than Reliance going forward. If you have an opportunity to dip into Trent, please do. But as I'm recording right now, I would say Trent is way too expensive to even consider. If it corrects to the point, where we can consider, compared to Reliance, it's a much stronger bet because it has high margins, it's focused on fashion and retail growth, while Reliance is more divided. All other segments and sectors in there under the Reliance retail brand, while Trent is very focused on fashion. So I would say Trent has a much stronger advantage compared to Reliance retail. And Trent is growing much faster compared to Reliance in fast fashion. Now with Shein there, is it going to bite into Trent in such a huge way? I really don't see it, because Shein is an online platform and I don't see Shein stores opening anytime soon. And Trent, meanwhile, is an offline platform and they have a huge presence offline, and a lot of their revenue generation comes offline too. And talking about brand loyalty, Tatas have a much stronger brand compared to Reliance in terms of consumer mind, especially when it comes to B2C. That is also a very important thing to keep in mind when you look at these two brands. Tata has huge loyalty in the consumer mind because of all the years and the brand royalty they have built with all those years, with the various brands they have built with consumers. They may not be the most fanciest, may not be the most alluring, but the Tata brand has one thing which always it stands for is quality. Whatever value you want to say, value for money, and quality, whatever you pay for, you're getting quality. Well, Reliance has been struggling with that because they have always been a B2B company. Most of their money, even when they were a polyester brand, before they got into petrochemicals, when they were doing Vimal, way back then, they've always struggled with this. They were always very strong. Their strength has been from B2B. So they're trying to get into B2C and build a new brand. That's what this whole Geo effort is, in AGO effort is, to try and distance itself from Reliance and show itself as a new brand, as a new birth. Maybe it will work, I don't know. As I see it right now, Tatas have a very strong moat, and the loyalty to the Tata brand is right now unshakable unless they do something very stupid, which I don't see happening. But it's worth keeping an eye on. So this is what's happening with Trent and Reliance and Shein between these three. Tomorrow is the Trent earnings report, the quarterly report, which everyone's waiting for. Once that comes out, maybe there will be an opportunity for a correction. But I don't see the correction being so huge in such a short span of time where you and me are going to be sipping tiffin and coffee on Trent shares. Because for us to even remotely look at it, it has to come really, really somewhere close to earth. But a lot of people look at Trent analysis very differently. They look at the median where Trent has been for the last so many years, and they say if you look at it like that way, maybe there is value in it. I don't analyze it like that personally. I look at it in another way because right now it is way out of my budget on a tiffin coffee budget. If I had to buy a share, a single Tata share of this value, the price where Trent is at currently, if I have to consider any other Tata company, I would rather look at Tata Investment Corp. Simple reason, because Tata Investment Corp is around the same range where Trent is, and Tata Investment Corp is a holding company with a lot of Tata brands under it. That's my view. I would like to know what you think. Please put it down in the comments below what you think and what you feel. And if you found this video informative and entertaining as always. It's been wonderful catching up with you guys on a Wednesday evening. I hope you had a great day and you did manage to do some investing in tiffin coffee range as always today. If not, tomorrow is another day. You'll have another opportunity to have some more tiffin and coffee. Do keep it in mind, we are nowhere near doing anything else crazier. I know there's a lot of news about Trump and all the things that are happening globally. Don't get swayed by all this. Like you saw what he did with the tariffs, it was more bluster. Then immediately he walked it back and he's doing something else now. Same thing, he's saying a lot of crazy things about Palestine, Middle East. It may just be a lot of nothing, which most of the time it is with him. It's his way of negotiating where he suddenly gets very aggressive and he talks, but action is very few. We'll have to wait and watch as far as these things are concerned. One thing is, the dollar has been getting stronger and stronger. The rupee is getting weaker. So that arbitrage is there. And because of that arbitrage, FIIs are very cautious about putting money in because they do not know where the bottom is. They're hoping that the American Fed cuts rates, but I don't see that happening. And even in RBI here, there are a lot of banks and everybody hoping for an RBI rate cut, which I also don't know. As a value investor, that too a tiffin coffee range investor like us, those things really shouldn't shake us too much because the range we are investing in, the length of time we're investing in, these things really shouldn't influence us too much. Thanks for watching the video as I said before. See you again tomorrow with another one. Bye. Bye.
Hey guys, that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.